All right. We are obviously in a recession. I think most people are aware that we're in a recession, but the suffering is very limited to the lower classes. I was just watching a video on Michael Bordonaro's channel where he was talking about an article, which I will link in the description, about housekeepers making $150,000 a year in Florida because there are so many wealthy people and they're flocking to places like Florida and they're having difficulty finding suitable staff. Of course, the skills that you will need for this kind of work, oh my God, you have to. The lady interviewed for the article was saying the housekeepers for the wealthy need highly specific skills, from how to move quietly and unnoticed throughout the house, to how to carefully clean antiques, flatware, and fine art, and how to properly wash and press fine linens. But there is a shortage. Palm Beach housekeepers are making $150,000 a year due to the mass wealth migration to Florida from New York and other high tax states. There are definitely people that are still have money. There always have been. They're going to make, and there are people who make money when there's a depression. So that is going on. So you might hear videos about people struggling to pay for things, but let's not forget that there are also people who are just swimming in money. But what I really wanted to talk about in this video was we are in a recession, okay, which the prices of things are going up. Yesterday I was at Sprouts, and I usually don't pay attention to the prices of things, but I was kind of paying attention yesterday. And the eggs that I buy, the pasture-raised dozen brown eggs, they used to be like in the $6 or $7 range. Yesterday they were $9.99. The Ezekiel bread was like $7.50. The cheese was like $7 or $8. Like, I was shocked at the prices. I'm about to go into another grocery store now and I will look at the prices. Maybe I'll make a separate video, but I usually just grab things and put them in my bag because, I mean, I cannot afford a housekeeper or anything like that, but I don't look at the prices of groceries usually. But anyway, the point of this video is how in all of this problems with companies laying off, companies dropping prices, people, delinquencies rising on car loans, how, and the minimum, and the wages so low and the rent so high and the housing costs so high, how come the stock market keeps going up and house prices haven't fallen? And the answer is very simple. It's because the money that they printed during the lockdown, where they told people that they were not allowed to work, unless, of course, you were running a dispensary or something that they thought was okay. It was all a big farce, in my opinion. But they're like, don't work, we'll flood you with money. We're going to rain money from the skies. Well, all that money created huge demand, and without the making the products to go along with it, because even China was in a lockdown, it just made the prices of things start to go up, especially rents and housing prices went up during the lockdown. But the reason that that money has to go somewhere now in an economy that's actually productive and booming, if you have money saved, what are you going to do with it? You're going to invest it in something that's growing, like a business, like infrastructure, research and development, expansion of your manufacturing facility, improving your products for future sales. But from what I can tell, the money in the stock market is just going up based on speculation, not on the underlying fundamentals, because the stock market is supposed to reflect the values of the companies. And these companies, for a long time now, for 10 years or more, they've taken a large chunk of their profits, and even they do not see themselves worthy of investing. And these companies do not want to invest in their own companies. They're not expanding. They're not increasing their hiring. They're not doing research and development. They're not even investing in American infrastructure projects like the BRICS countries are doing with the Belt and Road Initiative, building more ports, building alliances, railroads. We're not doing any of that. Instead, they're using that money for speculation to buy back their stocks, and that increases the value of each share. They're doing financialization. And so all of these hedge funds, even they don't find a good place to invest in this country. So what are they doing? Buying real estate. That's where you can see that there are no investment opportunities left, and this is all speculation. This is all money that was printed that has to go somewhere, and that's why the stock market is going up. It is not based on fundamentals. You know, I was you know, in my 40s during the internet bubble, and I was like, this is just a big bubble. I didn't participate in it, and then there was the housing bubble, which I was late to see, but I eventually did see before it was too late. And what did they do? I was waiting for house prices to come back to baseline, but they couldn't. They never let it go. They never let it correct. They couldn't, because the banks would have gone under. We cannot let things correct. That's what I was going to say. I do not think that we can let things correct. Where I missed out on the stock market, I was shorting stocks going into the housing bubble burst, and I made money during that, and I did not foresee that the stock market would keep going up, and I did not foresee that the house prices would be prevented from normalizing, because the Fed wants to keep blowing bubbles to keep the economy going. They cannot afford to do what Volcker did in the 70s, raising interest rates, stopping inflation, and going back to baseline, because this whole economy is built on debt, and it would collapse. Now, I do not think it's going to collapse. I'm not a gloom and doomer. I mean, eventually, it's going to either slowly deteriorate and crumble over time, which can take another 5 or 10 years, I don't know. Or we could have some kind of economic shock, which I don't think we can get our way out of, because at this point, we have $31 trillion in debt that we can't repay. The United States is insolvent. I guess we would have to sell our assets to China if they want to cash in these treasuries. Who's going to buy these treasuries? We can't afford to buy our own treasuries back. So how, you know, I keep telling people this is a house of cards, but they cannot let things go back to baseline, because number one, it's all based on debt and leverage and speculation. So if you let it collapse, everything's going to collapse. The system will disintegrate if you don't bail it out and keep it artificially afloat. And the other thing is, where would all this money go? Now, if all these people took their money out of the stock market and residential real estate and actually invested it in this country to build something for the future, where would it go? There are no avenues that are set up by the government, no big partnerships set up that you could invest in. I don't see the government building any infrastructure projects or alliances with other countries. Like even with Africa, we plunder them. We plunder them, and then we indebt them to us. And at some point, these African countries are going to default on the U.S. debt and say, fuck you, and build alliances with the BRICS countries, Russia and China, who are going to give them loans, but they're going to have a stake. These countries are going to have a stake in their own economic future, which the U.S., through its colonialism and empire building, is not going to allow. So I personally am looking more like, okay, I would want to invest in, I have to look at which stocks are for the BRICS countries, China, India, Russia, Africa, because that's where the growth is going to be, legitimate growth, lifting people out of poverty, legitimate growth, rather than all of the speculation. And, I think these things are bubbles. All this money they printed during the lockdown, which was was it $9 trillion or $13 trillion? It had to go somewhere. And so it just blew up the stock market and blew up residential real estate, not based on, real estate was always based historically on what people could afford to pay and how much it would cost to build something. It was built on the, when I made a price to income chart years ago for San Diego, the housing prices should usually be 2.5 or 3 times the median income of that city. But we got to 12 times. It was hugely leveraged and built on speculation. And the only reason a lot of people can buy houses now is because they inherited money from their boomer parents, who happened to be born during a time of huge financialization and asset price increases that were more than the typical 2 or 3% a year. So usually you would buy a house because after 30 years you paid it off, not because it appreciated like a bubble. This whole thing is just like a house of cards. And like, I am not a big risk taker. I am not a big risk taker. I have my money in treasuries and CDs mostly. And I missed all the big run up. Like, all these people tripled and quadrupled their money because they believed in growth. They believed in the charade. Basically, I think they made money because they believed the charade and it worked out for them. But I didn't believe in the charade. I saw it for what it was, so I missed out on the speculative boom. But the stock market and the housing market are still high because it's all propped up by fake money. And at some point, I don't know, they're never going to let it go down. They're going to try to keep it up till the very bitter end, in my opinion. But it's not related to any fundamentals. And I think it sucks for people like me who are actually using logic. I'm not using the right logic. This is logic. The Fed will never let this go down, so just play with the big boys. But that's what they said in 2001, or whenever it was, 1999, 2000, 2001. I remember one of some of my friends, I was like, why are you investing so much money in these internet stocks, internet funds, that have no profits? They don't even have a product. It was just based on like the potential earnings or something. And that's when the internet was just like starting out to be a big thing. And they're like, yeah, we want to join the party, you know, we want to play, we want to make money. And I said, well, how will you know when the party's over? They said, we'll know. Well, they lost a lot of money. They lost a lot of money because it would go down and they are like, ooh, it's going to come back up, it would come up. It would do this. And then they'd be like, ooh, I want to get out. But as soon as it gets to this point, I'll get out. But it never got high enough to where they were willing to take a loss. So they wrote it all the way down. They wrote it all the way down. And, you know, during the housing crash of 2006, it actually started slowing down in 2004. A lot of people don't know. It started slowing down because homes, I was a realtor, well, my broker was a realtor at the time. It took, he was selling a friend's condo, and instead of having multiple offers, it was sitting on the market, and that's when he knew it was turning, and that's when it started at the low end. It was taking longer and longer for homes to close because these subprime borrowers were the first to feel the pain. The beachfront people never really felt it, you know. The people buying $1 million and up were never really affected. So, yeah, so, but a lot of people who speculate on those homes, they lost a lot of money because they were leveraged. They had bought so many homes and they were flipping them, and then they got stuck holding these homes and they lost money too. I mean, I think the whole bubble thing is very interesting because people get very committed and they believe that, oh yeah, you know, I'm smart, I'm a good investor. They get hooked onto this herd mentality, and then everybody's getting in, and then they think they're such a smart investor because they're making all this money and they feel really good about their skills. But then it starts going down, and then that's how people lose everything, because they're not using logic. It's emotional. People are emotional. They say that they purchase based on logic, but they don't. And we don't have all the information anyway on what's going to go up. Only Nancy Pelosi and the other politicians know what's going to go up or down because they have insider knowledge. And unlike the rest of us, they're allowed to trade on it, and it's legal for them, you know. But anyway, I just wonder when it's all going to go down. What do you think? How do you explain the stock market and the housing prices up high? Oh, and one more thing. Someone was telling me the other day, he was looking at buying a truck, a certain type of truck. Before the pandemic was one price. So in 2019 or so, I think it was one price. And now 5 years later, it's double. It's doubled. That's crazy. That's crazy. And now Biden wants to put 100% tariff on Chinese electric vehicles, which is going to raise the prices for us and for companies buying it. They don't have a plan. The best and brightest that we have, that we've elected, these old geezers, they're not smart like John Mersheimer. He's a smart guy. There's some people that are wise that we need in power. But some of these rotten out from the inside geezers with no soul, the best and the brightest, they don't have a plan. They're just winging it, trying to keep the whole thing propped up, in my opinion. I don't think they have a plan at all. But what do you think? Do you think they have a plan? And how do you explain the stock market and the house prices going up, 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 or staying up when we're in a recession? Or maybe you think we're not in a recession. I am here for the comments. Thanks for watching my video, guys.